Let's go ahead and talk about market structure. Now, it's important to understand when you're trading, whether you're trading on a 1 minute time frame, um, you know, 15 minute, 1 day, um, weekly, monthly, quarterly, yearly, whatever time frame you're using, that's fine. What's important as a trader, whether you're a day trader or swing trader or long-term position investor, um, you must understand market structure. And what market structure really is identifying trends, which include impulse moves and correction moves, identifying support and resistance at various levels, right? And then, of course, identifying patterns within those trends and support and resistance zones. This is what is commonly referred to as market structure. And what's important to understand, whether you're new, intermediate, or professional trader, is that market structure really helps determine, um, you know, which way a particular um, stock is going, and that's why market structure is commonly referred to as price action. Really, is understanding, hey, where is this um, equity or stock, for example, coming from? What is it doing now, and what are the chances of it heading, continuing to head upward, or continuing in this trend, in a ranging bound uh, direction, or um, moving, you know, uh, down in a downward trend. So let's take a look at WEI on June 29th, for example, and June 30th. So if we look here, one of the first things we identify is an upward trend, right? So let's just kind of identify that. And of course, here we're on a 1 minute chart. And this upward trend automatically tells us that, hey, look, at least, in the last few days here, there has been this, general upward trend, and it's kind of bouncing between the ceiling and then, down here in this, um, lower part of the channel, and then it bounces back up, and then in after hours, it kind of tests that. Pre-market the next day kind of tests it again, and it continues to test as we continue to go until eventually breaks out of that trend or channel right down here and begins to break down. Okay, so let's also talk about support and resistance, right? So on any given day, you can kind of see there's support and resistance uh, all over the place, right? So here we see some support. Here we see some resistance. Pretty easy to see. And you'll see it, kind of throughout. So we'll see some more support here. Again, we'll see some resistance right there, right? And then within all of this, you see patterns, right? So here, if we just hone in on this particular day, we see that we have a bull flag pattern here, right? So there's the flag pole, and then you can see the flag formation here, and then that is typically a bullish pattern, right? So it kind of moves back up, right? You also could identify what we call the ABCD bullish formation pattern, where if we draw our Fibonacci lines, we can kind of see, oh, okay, this is kind of heading in an upward trend. We get our retracement, and it looks like it ultimately hit that target profit, which is the Fibonacci extension. So if you don't know anything about Fibonacci or anything like that, feel free to check out my other videos. You can kind of see that here we had an ABCD pattern, A, a B, a C, right here at the 50% Fibonacci retracement. And then your entry could have been anywhere in here with a target profit of at least the 1.272 Fibonacci extension, which you can see almost hit. But again, even if you got in right at the breakout, that's a nice little 20-25 cent move where you have a nice little win there. So anyway, understand market structure. It's very important to know where a stock is coming from. Look at the bigger picture. Identify the trend, the support resistance, and the patterns within all that, and you'll be instantaneously a better trader. Enjoy.